10 reasons buy-to-let landlords are selling up, and more importantly, what sort of buy-to-let property landlords are holding on to, buying and investing in, and why. If you're new here, make sure you subscribe, hit the bell icon. We put out 3 videos each and every week, all keeping you up to date with what's going on in the property market and keeping you more successful. Don't forget to like and comment below. Tell me what you think. I'd love to know. Okay, the newspapers are full of these sort of stories about landlords selling and exodus on the market. I mean, the truth is there's a lot of change right now. We all know that. There's a change of government with a bit of a change of direction and emphasis. We've got Renters' Rights Bill coming in. So at any time when there's a lot of change going on, people in the game basically reassess and decide whether they want to be in it, how much they want to be in it, or whether they want to exit completely or refocus their activities on a particular sector of buy-to-let. So let's look at the 10 reasons why buy-to-let landlords are selling up, and then we'll look at what sort of properties people are keeping and investing in and why. So reason 1 is the old-timers. There are a lot of people that have been in the game for a few decades or so, and they've had a good run, and they're at an age and a stage of life where they simply don't want to adapt and change to the new way of doing things. And this happens when there's any sort of change. And reason 2 is fear. I think the whole thing about Section 21s being abolished has simply spooked a lot of people. A lot of people are concerned about how they're going to get vacant possession back of their property if Section 21 is abolished. Now, I think this fear might be slightly overblown, because at the end of the day, if the tenants are paying their rent on time and they're looking after the place, then why would you want anything different? Of course, you do get problem tenants, and the answer to that is absolutely thorough referencing. I think the days of self-managing are pretty much over. If you have a reputable agent manage your properties for you, you should be able to mitigate these sort of risks. And then also make sure you get rent and legal protection insurance cover for every tenancy that you do, and you've pretty much mitigated that risk. The third reason landlords are selling is they don't want to adapt to the new environment where there's a lot of bureaucracy and there's a lot of paperwork that needs to be done when you do each and every let. Because now being a landlord is all about compliance, compliance, compliance. You've got to make sure you comply with all the rules and regulations at every single stage. When you do viewings, there are rules and regulations about that. When you actually take an offer for a property, there are rules and regulations about that. When you reference a property and select a tenant, there are rules about that. When you start a tenancy, in terms of the certification and paperwork that you have to issue the tenant with, there are rules and regulations about that. And quite frankly, a lot of property is quite entrepreneurial. You're finding a site, you may be developing it, you're trying to add value to it, and it's very, very creative type of thinking. But operationally running a buy-to-let portfolio is very much tick boxes and compliance and operating procedures. And often those skill sets, the entrepreneurial skill set and that running a detailed operational business, they don't really sort of match. And again, like I said a few minutes ago with the last point, getting a professional agent to do that for you is more critical than ever before. The fourth reason why I see landlords sell is the return on equity dilemma. Buy-to-let works on leverage. It really doesn't make sense to do buy-to-let with a ton of cash. So what you're doing is you're having some money invested in a property and the rest is provided by the bank. If you bought a property 20 years ago and you haven't remortgaged along the way to raise capital, then you've got that same mortgage debt that you had 20 years ago. But because of capital appreciation over time, you will have a lot of equity in that property. So when you do the maths and you say, well, look, this is the rental income that I'm making per year. If I divide it by the equity I've got tied up in a property, then my return is actually quite low. So, and this is particularly true of landlords who have held properties for 15, 20 years plus in high value areas. They're looking at the equity that they've built up in the property. They're looking at the return they're getting on that equity. And they're thinking, well, it's not worth the hassle or the work or the adaptation to comply with the new rules. I might as well sell and put that equity, release that equity and do something else with it. But that same logic doesn't really apply to a newer investor. If you're a newer investor with the same type of property, you may have much less equity tied up in the deal. And provided you're making healthy, positive cash flow on that property, then your return on the equity, on the minimum equity you've got tied up in that property is far greater. So it's worth more to you than the old-time landlord. Reason 5 landlords are selling is that for them and their financing arrangements, it's simply not working anymore. Now, interest rates rose quite a lot. They've fallen back by 0.25%. A lot of people have been in fixed rate mortgages and they've come out of those, and they're finding that the rates that they are on are relatively high. And what that means is when they do the maths, they're looking at the cash flow they're coming in, they're looking at the cost of servicing the debt, and it just doesn't simply work anymore. Now, sometimes, like if you got a 5-year fixed rate mortgage 5 years ago and you got a 75% loan to value loan, and you got that loan on a much lower interest rate than today, then when you go to actually refinance that property today, you find that at today's interest rates, you can't borrow 75% loan to value anymore. You can borrow slightly less. So if you haven't got the funds to put in to redeem some of that debt, you're in a situation where you're better off selling. I'm going to come up to reason 6 in a moment, but the whole point of this video is so you understand that there are a myriad of reasons why landlords are selling, and it's often driven by their specific circumstances. But those specific circumstances may not apply to you. Some of these circumstances are simply the circumstances built up over time, but when you start investing today, you're starting with a blank sheet of paper. You know the rules that exist today and you can start afresh. And then many of these reasons that I'm giving you will not simply apply to you. Let me know what you think in the comments below. I'd love to know whether you're selling any of your rental properties, and if so, why. And I'd like to know what you're acquiring and what you're keeping as part of your buy-to-let portfolio as well. Comment below. Reason 6 is the dilemma of unincorporated landlords. Now, in the old days, a lot of people built buy-to-let property portfolios owning them in their own name. Nowadays, most investors do it through a limited company. But back in the day, people invested under their own name. Now, the problem is that thanks to Section 24, which is a tax which George Osborne brought in 2015, you pay tax on your mortgage interest. You don't get any relief on the mortgage interest that you pay. And that is absolute garbage, because mortgage interest is, of course, one of the largest expense that you have as a buy-to-let landlord. It's a cost of doing business, and it's the only business activity in the UK where you can't deduct your loan finance expenses. That's of course ludicrous, but that is what it is, and those landlords are stuck, particularly with rising interest rates. Their property portfolios are basically, some of them are loss-making. If people are professional landlords and they have quite a lot of properties and they do landlording as a professional business, then there are options for them to incorporate their properties into a limited company. And people who own properties in a limited company, of course, are not affected by Section 24. But people that just own 1 or 2 buy-to-let properties in their own name as a bit of a sideline are quite stuffed by this Section 24. Reason 7 why landlords are selling up is fear of capital gains tax. Now, this applies to unincorporated landlords again, people that own properties in their own name. they're subject to capital gains tax when they sell a property. Now, Rachel Thieves has proposed to increase these capital gains tax rates, and the fear is that these will go up to be in line with income tax rates. Now, that can be quite catastrophic, and many landlords who own properties in their own name are rushing to sell these before any budget announcement or change in capital gains tax takes effect. Now, of course, the capital gains tax issue only affects you if you own your properties in your own name. If you own them in a limited company, you would pay corporation tax on your disposal, so you're unaffected by that. Reason 8 why landlords are selling up is the environmental lobby. Ed Millipede has announced that all rental properties need to be upgraded to EPC C rating by 2030. Many properties, it's just the cost of the works, the disruption to do the works on old properties, and the fact that you've got to empty the properties of your tenants to do some of these works just makes it unviable. And since owner-occupiers aren't subject to this requirement for homes to be EPC rating C by 2030, some of these landlords are saying, look, I'm not going to do these costly upgrades, sell it to an owner-occupier. And reason 10 why landlords are selling up is to basically prune the bush. Now, anyone with a portfolio of anything should look to prune the bush and get rid of some of the dogs from time to time. And this is something that I'm finding a trend with many portfolio landlords I know. They're not selling everything. They're selling a few properties that no longer fit their investment strategy as they go forward. I mean, with me, I'm selling flats that I bought in other people's blocks in the early part of my property investing career. I'm also selling larger units which don't really go down the route that we're going down at the moment. So those are 10 reasons why investors are selling buy-to-let properties. Let's look at properties which buy-to-let investors are investing in right now. HMOs, houses in multiple occupation, they do represent good value. Rental demand is sky high right now. The cost for a single person to rent their own flat is relatively high. When you're renting your own flat, you're responsible for your own council tax, you're responsible for your own utility bills and the like. When you live in a house in a multiple occupation, you basically have shared utility bills. The council tax is usually paid by the landlord for the whole building, and you're renting a room and sharing facilities in the house. And in most towns and cities across the UK, there's a huge amount of demand for this type of stock. Now, there's a lot of interest right now in multi-unit freeholds, and I've been a big fan of this for a long time. Multi-unit freeholds is where you have several flats in one freehold building. Now, when you look at yields on rental properties, flats always deliver higher yields than houses. But then the thing with flats, especially in other people's blocks, you've got those pesky service charges which bring down your net yield quite a lot. But if you own a freehold building which comprises of 2, 3 or more flats, then of course you get the rental returns from that flats give you, plus of course the benefits of owning the freehold block. So there's a lot of interest right now in those. There's a lot of people either trying to make these themselves by doing commercial conversions. So you take a commercial building and convert them to residential use where you build your own multi-unit freehold block of flats. There is good opportunities right now looking at picking up multi-unit freehold buildings which are on sale, either from tired landlords, retiring landlords and the like. Because often these sort of blocks are a little bit tired, they haven't been renovated in quite some time, and there are opportunities to improve the quality of the stock, improve the rental cash flow of that property, and therefore get a higher refinance value on it, and pull out a lot of your money on that deal. Commercial property is proving very popular right now. I'm seeing a lot of landlords trim down some of their residential buy-to-let portfolios and investing that into commercial buy-to-let property, simply because, first of all, the tenancy rules aren't anything like residential tenancies. Commercial tenancies are rented out under an Act of Parliament which hasn't changed much since 1954. Commercial tenants tend to stay there for 5 or 10 years or even longer. Rent is paid quarterly in advance, and so a lot of buy-to-let landlords who have started in buy-to-let, residential buy-to-let, are gradually diversifying into a little bit of commercial buy-to-let too. So yes, some people are selling, but you've got to look behind the headlines and look at the reasons why. And if those reasons don't apply to you, then you don't have to think in that sort of mindset. The mindset to think about is, well, what is actually worth doing in property right now? Because property has always been and always will be a great long-term wealth builder. It's just looking at where you are right now and looking at the right way to hold long-term property assets for the future based on the rules and climate that exists today. That's what it's about. That's what I've tried to share with you in this video. Let me know what you think in the comments below. Like, comment, subscribe for more. See you guys next time. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.